because it's only when these numbers improve that inflation goes down, that jobs are created, that there's peace and security. So I'm hoping that this recovery is sustained. I'm hoping that the transformation of the economy continues. I'm hoping that the numbers get stronger as we go into 2017. I'm hoping that we're able to get out of the contraction this year, because the longer the contraction, the wider the gap in unemployment, and the harder it is for prices of goods and services to slow down, which makes things harder for all Nigerians, including myself.
Well, that's a nice one. Well, I have with me here in our Lagos studios Baba Ibrahim, who is a trader and chief executive officer at Main Street Securities. Good morning. Thanks for coming. You've been listening to the Statistician General. Give us 1 minute of your thoughts about everything you've heard from him, about where we are in first quarter and what the outlook is.
Yes, I think quite clearly, given the background of where we're coming from, 2016 has been particularly, turbulence, yeah, so to speak. We had foreign exchange, hitting the rooftop. That made it pretty difficult for a lot of manufacturers to source inputs, and of course, it kind of stepped up price of most of the commodities. Yeah, but I think there's a major turnaround in what we're seeing from where we're coming from. The figures are actually looking up. Yeah, the inflation figure, dipped, as low as I'm thinking about 1864. Now it's coming out to about 1723. I think that's quite encouraging. And we've seen the convergence of the foreign exchange, yeah, both markets, yeah. Before now we saw a very, very deep, market. Right now everything is coming closer. So I think in the medium to long run, it's important that the authorities sustain this current momentum. As much as possible, you deny, unessential imports into the country so that we can focus on the agricultural sector, be able to feed ourselves. Then, of course, the foreign exchange we're earning, most of which is coming from the oil and gas sector, will be channeled to important imports. I think that's my take.
How do investors react whenever we have a GDP numbers out?
Yes, the GDP numbers clearly shows the momentum and the direction the economy is going. Yeah? If the figures are actually looking up, it shows that all the components that actually make up the GDP are actually looking up. So I think from time to time, the market analysts actually excited when we see the GDP numbers, in the positive territory. Yeah, I think that's
yeah, but investors talk to you as the head of the CEO of a broker-dealer firm. So when they speak, because you talk about investors who buy the shares of manufacturing companies listed on the market, what are their concerns? Today, they're going to hear about the GDP reports tomorrow and the day after. What questions would they be asking you? What would be their main concerns about what we know into what we don't know moving forward?
Yes, quite clearly. I think a lot of investors want to see improved numbers in, for instance, Guinness, the turnover, the PAT. Once those figures are rising, it simply means that the consumers, purchasing power is enhanced. People are buying the products. And of course, it equally means that jobs can be sustained where those momentums are in positive directories. Of course, all these dynamics hat up to the GDP numbers that we're looking at. So, of course, where the reverse is the case, people are not buying the Guinness items, people are not buying the PZ, people are not buying the Unilever. All these figures will drop remarkably and resultantly will affect the GDP numbers. And of course, that will go to affect the inflation rate, to a very large extent. So I think it's important that we see all the figures, looking at up, and that will, tend to give us enhanced GDP numbers.
Thank you very much, Baba Ibrahim from Main Street Securities. Dr. Yemekale, the Statistician General, thank you very much. A very quick question for you. In terms of the non-oil sector, manufacturing sector, and the overall GDP, where do you see momentum coming through as we end first quarter with the numbers you've given us today, technically speaking, and we're cruising to the next 9 months of 2017? Where is the momentum coming from in the real sector, really?
I think 80% of, about 80% of GDP using the expenditure approach is household consumption. So anything that is, so you have to look at agriculture, you have to look at manufacturing, and you have to look at telecommunications. I think those three, and trade, by the way, those three are the ones that determine what is going to happen to the economy, because they are directly linked to household consumption. So I think the improvement in manufacturing is positive. We have to watch trade. When trade starts to turn positive, that will be a sign that we are really out of this. But I think it starts off with manufacturing. We have to also watch the oil and gas sector. Like I said, the oil and gas sector determines up to 60% directly and indirectly of the entire economy. So I think oil and gas sector, getting it right, the continuous recovery of the manufacturing sector, we have to watch trade, and of course, agriculture as usual, holding forth, staying positive as it always does. I think that's where growth is going to come from going forward and what we have to watch.
Thank you very much, Dr. Yemekale, the Statistician General of the National Bureau of Statistics. We thank you very much for your time today and coming here on Channels Television to break this for us. Do have a great day and week ahead of you. Baba Ibrahim, the Chief Executive Officer at Main Street Securities. Thank you very much. You need to hold on a little bit for a few minutes about the GDP and the MPC. But one minute very quickly, what's your reading of today's MPC decision after lunch?
I think there's every reason positive, so to speak, that the rate should be left the way it is. My take is that the gains of the past couple of months will be sustained and increased if we leave the numbers the way they are. Because I think some analysts actually are suggesting that the CRR rate should be reduced to say 20%. Yeah. From 22.5. I think that that simply means more money will be put into the banking system. And of course, the central bank in turn will have to get this money through ways and means at a cost. Yeah, so I think that the status quo should be maintained, and let's see how we further consolidate on the gains of the convergence in the FS markets, the gains in the capital market. The capital market has actually gained well over 6% in the past 6 months.
Looking positive.
That's phenomenal.
You came in here looking really happy. I know, that's why. Okay, we'll take a break. When we come back, Baba Ibrahim is still here, and of course, Ogo Okiti of Time Economics in Abuja. We'll wrap up the program with both of them.